picking up where we left off here, we've got our swinging gorilla plays. Basically, if we start where I had been talking about before, you've got the novice gap into resistance. That tells us things have become exhausted in the short term. Price then falls down to major support where buyers step up in a big way with this bullish mortgage play. You get a wide range bar up into the top end of resistance where you then get this sell setup that fails. Which again, I mean, that should be no surprise that it failed because of how strong we came off the low. You've got this professional gap with big volume igniting a brand new move. So you should almost expect that sell setup to fail. Not almost, you should expect that setup to fail. Okay? Then the next two setups that form following that are both buy setups and 2020 bars. So if you're playing it from a 2020 point of view, you could enter above the 30-minute high, or if you're waiting for the PBS to really form with the changing of the guard, as is the case in both of these, that's where you look to enter, is above those highs. All right, so take a minute, guys, here. Name these three gorillas, and then these gorilla tactics, and then we'll go through them together. The first one at 1. Yeah, the first one at 1 is definitely a mortgage gap. Now, it doesn't follow through in the way that you would have expected based on some of the other examples that we looked at. But yes, this is a mortgage gap because it's gapping down below the prior green bar. Right? So this is definitely a mortgage gap. As it then falls, we get multiple bars down. Remember, for it to qualify as a potential gorilla tactic, you need to have at least 2 bars up or down, with the most recent bar being a 2020 bar. Right? So just keep that in mind. 2020 bar does not necessarily have to be a wide range bar, because this clearly is not a wide range bar, but it does open and close in the upper and lower portion of the candle. So then at 2, yes, this is a gap and snap. It gaps down, snaps back up, entry calls for entering above the prior day's low. So as it trades up above the prior day's low, you enter long, stop goes under the low of the current day, and then you manage it on up. Here you get a beautiful gift in the form of a gap up the next day. And then here at 3, you've got the counterpart to the gap and snap. Exactly, the gap and crap. So here you're up, gaps up, begins to fall, trades back down below the prior day's high. You enter short, and then, as you can see, you get a nice move lower. So that's exactly correct. Mortgage gap at 1, gap and snap at 2, and then a gap and crap at 3. Next, we've got a whole bunch, not all of which offer gorilla entries. So at 1, we really don't have anything here at 1. Yes, you've got multiple bars up, topping tails. It does look like it's getting ready to move lower, but I really wouldn't call this any kind of quality gorilla tactic. You could just look to sell it short, right, under these lows here. Now remember, one of the easiest ways to identify if it's a gorilla tactic or not is going to be based on, do you have at least 2 bars up or down, and is the most recent bar a 2020 bar? So if you don't have that, then you're not going to have a gorilla tactic. As this then falls, again, here we really don't have any gorilla tactic, but we do have a pullback onto support. There is a little gap up here, but it's not going to necessarily qualify as a guerrilla tactic. You know, you could make the case or the argument that this, prior to number 2, that was a guerrilla tactic. That was your 2020 play. Now, it didn't follow through higher, but that was a guerrilla tactic. Right? But then here at 2, you really don't have anything going on as you get the bottoming tail, and price then continues to try and stabilize at this point. So really doesn't, like I said, doesn't qualify as a guerrilla, but because it's pulled back to support and it begins to stabilize, you could look to simply play it as a buy setup off of major support. Right? So then price begins to move up. Now it reaches resistance again. And what happens here at 3? You guys tell me, is this going to be a guerrilla tactic at 3? Yes or no? Yes. Yes, it is. All right. Now, which is it, right? Now that we've determined it is going to be a guerrilla tactic because you've got 2 bars up and the most recent being a 2020, right? It's your 2020 play. It opens neutral, so you wait the first 30 minutes. And then if it trades below the low of the 30-minute bar, then boom, you enter. Nice move down. Okay? Then here at 4, this is also a guerrilla tactic. Why? Because you've got multiple bars down. This is a 2020 bar. It's into support. This is your bullish gap surprise. That's your bullish gap surprise as it then rallies. Once again, here you have another multiple bars up, 2020 bar, into resistance. Now, before we continue any further, I'd also like to point out that this is within the context of a sideways range. So, as I said at the start of this chapter, that's what you expect to see, or when you expect to see these more often setting up, is within sideways consolidations. Okay, so I just wanted to point that out before we continue here. So at 5, you have again your 2020 play because it's opening neutral. So wait the first 30 minutes and then find an opportunity to enter below the 30-minute low. And then at 6, it's just the opposite. So up here, you've got the bearish 2020. Down here, you've got the bullish 2020. Because it's down multiple days, multiple bars, 2020 candle opens neutral. Right now, not only is this a 2020 play, but what else is it? You guys tell me, what else could we consider this? Maybe you don't enter it over the 30-minute high. Well, yeah, it is a buy setup, but as far as guerrilla tactics, what is the other guerrilla tactic that we could consider this? Not climactic, but this would also be a bear trap because it trades over the high of the bearish candle, right? So it opens neutral, making it a 2020 play, but then as it trades up above the high, it's also a bear trap. Okay? You see that, guys? Okay, cool. So then as we continue along here, again, 2020 play up here at 7. You got your multiple bars up, opens neutral, so there's your 2020 play. And then down here at number 8, this is also a 2020 play. Now, you might initially look at this and say, well, isn't it well, no, I was going to say initially you might look at it and think because it traded lower, maybe it's a gap and snap. But because it opened neutral here, it's a 2020 play. And this is why with these 2020 plays, you wait the first 30 minutes. Because as we can see, this did trade lower. Hopefully it traded lower off the open and not after taking out the 30-minute high. Because if it did it in that way, we would have been stopped out. So, Like I said, hopefully it didn't play out that way, but by the time it recovered, it would have taken out a 30-minute high because it closed up at the high of the day. Is it another 2020 play between 6 and 7? So I'm going to assume you're asking if right here is a 2020 play. And yes, well, that would be more of well, not really a gap and crap. But yeah, that would be along the lines of a 2020 play because it didn't open above the prior day's high. So yeah, you could look at playing this as a 2020 situation. Had it gapped up above the high, that would have been even better because then you could have played it as a gap and crap. Then at number 9, we have once again what is a 2020 play, but also I know it doesn't close below the prior bar's low, but it did trade below it, which means it did trigger a bull trap. Right? So it did trigger that bull trap scenario as well. And eventually, it took a little bit of time, but eventually did work its way back down. And then at 10, there's really nothing here. And, if anything, you've got a little consolidation. Maybe you buy the breakout from that consolidation, but there's really nothing going on there at 10. We then get a move up and really nothing at 11 other than a climactic sell setup, right? It could have qualified as a guerrilla tactic, but it opened neutral. It doesn't look like it would have taken out a 30-minute low. In any case, though, you definitely have a climactic sell setup or just plain old sell setup into major resistance. Right. Then at 12, 2020 play also turns into a bear trap as price rips to the upside. And then at 13, this is also a 2020 play, which may or may not have actually triggered. Right? It's hard to say whether it would have triggered or not without looking at the intraday charts, but we do know that it opened neutral and spiked to the downside before coming back up. So as I said, it's tough to really say whether or not it would have triggered, but we definitely know that it did qualify as a 2020 play. What do you think of AGX, the last 2 bars? So the requirements for the 2020 play, or I'm sorry, I don't know why I read it like that, for the bear trap, basically all you need is 1 bar down. If you have more, then that's fine. But 1 bar down, and then the trap takes place when you trade over the high of the red bar. So yeah, AGX, I can bring it up here. Just give me a second. All right, so can you guys see AGX? All right, cool. So yeah, after the last 2 days here, you had the big move down. Then on Friday, it gapped up. So you could have looked at this as a bull gap surprise, which would have called for an entry either immediately or if you go down to like a 5-minute bar, right? Let me scroll this back a little bit. You could have entered over the 5-minute high. So this was the opening candle right here. So you'd enter it over that bar's high, or you even got a 1, 2, 3, 4 continuation, right? Here's the wide range bar up. Then you get your inside bars, so you can play it over the top of that consolidation for a move on up. So yeah, AGX definitely would have qualified. 1, 2, 3 down now on the daily. Let's go back to the daily there. Well, let's take a look at the weekly first. So the weekly here, big move down, right? That was a decent little breakdown on the weekly as it had come down to the bottom of that support area. So it was a decent little setup. Looking at it now, I mean, I think it's going to take a little bit of time. After a big gap lower like that, we need the moving averages to catch up a little bit. So I wouldn't be shocked to see this kind of trade sideways a little bit, maybe even try and trade a little higher first. So I would be more reluctant to playing this as a 1, 2, 3 down on the daily for those reasons. Yeah, that's a good way of putting it. Kind of climactic in a sense, absolutely, right? You know, because of the gap, because of how weak it became, that's a good way of putting it. I like it like that. Well said. All right, so here we have another chart, which again, going sideways. Want to make sure I'm pointing that out. So you got a 15-minute chart here going sideways. Stocks that are unable, or stocks in general, are unable to stay far from the 20 MA for extended periods of time. Therefore, wide swings away from the 20 MA represent some of the best guerrilla trading opportunities. That's what we want to be looking for. When we get far from the moving average, the 20 MA on, say, the daily chart, look for those guerrilla tactics like we just saw on AGX to materialize, to make themselves known. Look for them to develop. And, you know, I mean, look, you, as I said, you shouldn't be getting these guerrilla tactics as far as the gaps go on intraday charts. But if you get, say, you could easily get a bull or bear trap on a 15-minute chart. I mean, it happened down here, right? It happened down here. It happened up here on the far left. You had these bull and bear traps developing within a sideways consolidation. So there are opportunities where you can combine these guerrilla tactics with major support, major resistance concepts. All right, so let's go through, name these trades. Here at one, really nothing more than a climactic sell setup, and not even a great one at that, in my opinion, even though it did follow through. You know, you really didn't have the big volume. You didn't have the wide range bars. All you had were the higher highs, higher lows. So, like I said, to me, really wasn't even the best, but it did follow through nicely. At 2, here you have a bullish gap surprise. So this would be a guerrilla tactic, bullish gap surprise, and also bear trap because it trades over the high of that bearish candle. Price then rallies on up, retesting the prior high here at 1, and this results in a bearish gap surprise and bull trap. Okay. Price then pulls back down to 4, where you get basically an inside bar. You know, you could call it a 20-20 bar, but quite frankly, because it's in the middle of the range, I'm not too crazy about it. So if anything, it's more of a buy setup that fails because it's pulling back from a climactic sell setup and bear guerrilla setup up here at the high. As price then falls down to 5, you get a what? What do you get here? Instead of me saying it. What happens here at 5? Which one of our guerrilla tactics is this? Right? Multiple bars down, 20-20 bar, gaps down the next day. Well, it closes as a 20-20 bar, but the gap down makes it a gap and snap candidate. So if you're trading it from the daily, when it pushes back up and trades above the prior day's low, that's where you can enter it long. Now, you could, as a day trader, you could identify this as a gap and snap and say, you know what, if I see strength, off the 5-minute open, maybe I'll look to play it above that high. But as far as the daily goes, as it pushes back up above the prior day's low, that's where you enter it long. So it's not a mortgage play, remember, because for it to be a mortgage play, it's got a gap above the high of a red bar. Right, so the bullish mortgage play would have then meant it had to gap up, say, here. Which is why, because it's gapping down, that's what makes it the gap and snap. Right. So here we've got a monthly chart and several different setups, all of which we've discussed so far over the last 2 days. The first, you've got your buy setup on major support. The second, you have your pristine buy setup within transition A. At 3, you have your pristine buy setup within an uptrend. Right, so a nice little progression there, going from major support to transition to full uptrend. And then at 4, you've got your climactic sell setup. Okay, let's take a short little break here. I know we just had one, so I can get restarted, but let's take another quick little break here. We'll take 5 minutes, come back about 3 o'clock, and then push on through the rest of today's material. Okay, guys? Awesome. All right, so we're ready. I mean, we're basically into the home stretch here. Got a couple more slides to go through, but we're winding things down here on day 2. Hope you guys have enjoyed the course as much as I've enjoyed having the opportunity to teach to all of you guys what it is that we do here with this method. So, like I said, hopefully you really enjoyed it. But before we finish and wrap things up, let's talk about the #1 micro trading tactic as well as our momentum method. Right, so the late day breakout. This is, and I've already kind of touched on it over the earlier part of today, but this late day breakout is a setup or a trade that you could exclusively look for at the end of the day. I mean, you might look for climactic setups as well as these late day breakouts or breakdowns. And so I'm not going to read all this to you, but finding these tight consolidations can be very, as we've already seen, very lucrative if you know how to spot them or where to spot them, etc. So what it is we're looking for in terms of the late day breakout criteria, the stock has to be up on the day at or near its high. So this is also the criteria that we're going over here right now, is also something that you can build into a scan. So if you're like, how do I find these? This is how. You scan for stocks that are trading up on the day at or near the high, above the 20 MA. Right? And ideally the 20 is also above the 200, because then that tells us the larger time frame is also bullish. And you're looking for the stock to break out after 215, basically coming out of the doldrums period. Sometimes it happens later in the day. It might happen at like 3 o'clock. But that's what you're looking for. And once you've identified this consolidation, this late day breakout candidate, you then buy it as it breaks out above the top of the range. You put your stop under the bottom of the range. And then as price moves away with momentum in your favor, that's when you sell or trail out of the position. So as you can see here, this stock has enjoyed a very nice move higher here in the afternoon, right around 1 o'clock, started breaking out, then consolidated from about 1:30 to about 2:30, 2:45. So you had an hour's worth of consolidation. You then get your breakout, and it continues higher once again. So that's your late day breakout. It's very similar, if not the same, as the pause that refreshes, the only difference being the time of day that it's happening. Here again, we see another example where the stock is up on the day, nicely in the morning. It then goes through a period of consolidation or digestion, and then it breaks out. Right? Breaks out here just after 3 o'clock, and then you get some nice momentum here up into the close. You don't really scan for a flat moving average. What you would scan for is, as I said before, a stock that's trading near the high of the day. Now, that could give you some things that have exploded higher and are far from the moving average, or it can give you things that are going sideways near the moving average. Can you scan below the 10 and above the 20? You could do that. You could do that. See what kind of results it would give you. You know, it might also still throw out things that are pulling back after a momentum move higher where it's broken below the 10 but still above the 20. I mean, look, the bottom line, there's not going to be anything that's perfect. You're not looking for a scan to be perfect. You're just looking for it to point you in the right direction. So you can try it. See what kind of results you get. You're welcome. All right, so here you got another example. Stock opens lower, but rallies right off the open through the prior day's high, pulls back. You have a buy setup here. Overall, pretty nice bullish action. It's consolidating above the 20 MA and near the high of the day. So you're simply looking to buy the breakout as it clears the top of this range. Now, and then as it gives you some follow through, you look to sell away from it. Now, this one really never got far from the moving average to where I would have been selling it other than just closing it out into the end of the day. So, I mean, it still gave some nice follow through when you consider that the stop was, you know, less than 50 cents and that you got, depending on where you would have gotten out of it, you know, you got at least 75 cents, almost $1 out of it. So it was definitely a nice little trade there to close out the day. Here again, nice strong move up, begins to consolidate here. Nice opportunity to buy the breakout, looking for this to run higher. Now this one didn't wait until 215, so we really wouldn't call this a late day breakout, but it's still an intraday breakout that offers a high odds opportunity to capitalize on this move higher. Right. So again, just because it's breaking out and it's earlier than 215 doesn't mean you can't take it. On what time frame are we looking for these? You know, I would say a 5 or 15 minute would be my preference. Right? So that is the late day breakout. It's pretty simple and straightforward. But again, if you find stocks that are up on the day trading near the highs or near the lows, oftentimes, so long as it hasn't put in a full day's range already, oftentimes you will see that trend continue into the end of the day after that period of consolidation resets the cycle in a sense. All right. So let's now talk about the momentum trading approach. And to be honest with you guys, this isn't something I would worry about doing in the beginning, right? If you're just getting started out, I wouldn't worry about focusing on this. But over time, as you gain more confidence, as you see more trends develop, as you know how to spot them at the earliest possible moment, this is something you can work up towards doing, this momentum trading approach, or what some also refer to as, pyramid type of style, or pyramiding into a stock. But basically the idea is to build a position. So long as the trend remains, in this case, up, you're looking to continue building a position while at the same time locking in profit. So here, let's say you've identified this uptrend, you buy the breakout at 1 with 1,000 shares. As you get momentum in your favor, you sell 500 shares at A, leaving you with still 500 shares open. Price then pulls back into the moving average, stabilization. You buy another 1,000, so now you got 1,500. You sell 500 as it moves up, leaving you with 1,000 remaining. And again, moves up a little more. New opportunity, buy 1,000, sell 500. Buy 1,000, sell 500. So at this point, at D, right, you have 2,000 shares open and 2,000 shares having been closed out. So you're just, you're milking the trend. As long as it's going to continue offering money, you're going to continue to take that openly. And then as far as how you're going to manage this on the back end, you're just going to constantly either use the break-even point based on what your break-even level is, or the 40 MA. As it says here, whichever's higher. To be honest, I would say use the 40 MA as a reference, because that's going to be your guide to what the larger time frame is looking like. So instead of just using a break-even point, which again, as we talked about earlier, means you're only focused on the money, use that 40 MA, because that at least gives you some level of objectivity, meaning you're following the trend of the larger time frame. Okay? So this is the pyramiding or momentum type approach that you may choose to use, whether it's a daily chart or an intraday chart. Is there a late day breakdown? Well, this is a daily chart, so we wouldn't consider a late day breakdown. But because it's also in an uptrend, we wouldn't be looking to short this. If this is in fact what you're talking about, I just assumed that this was the area you were looking at. But because it's in an uptrend, we wouldn't be looking to sell that short. Oh, not this chart, but in general. Yes, there is a late day breakdown. So it would just be the opposite, right? We didn't look at any examples, but absolutely. You can do the same thing in a downtrend as the stock is trading near the low of the day. If it has room to move lower, look for it to break down sometime at or after 215. Okay. All right, so here's another example where you can use this momentum approach. And again, you buy 1,000 on the breakout. As it moves in your favor, you trail 500 out. It pulls back, right? You buy 1,000 and do it over and over. Is this similar to a power trend? Sammy says you need one power trend a month to make good. Yeah, I mean, this is essentially a power trend, something that you can just constantly buy and sell as it moves higher or lower. I mean, this works with downtrends as well. So yes, this is similar to that idea of a power trend because it is power trending to the upside. Higher highs, higher lows, rising 20 and 40, even space between. Right? So by the end of this here, you will have 2,500 shares open and 2,500 shares closed. Now, look, it might be different for you. Maybe you're not buying with 1,000 shares to start, which is fine. But the concept, right? You get the idea of what it is you're looking to do. While locking in profit, you're also looking to add to the position as long as this has room to continue moving higher. Now, I will say that if you are approaching resistance to the left, you don't want to just keep buying it as it's nearing resistance. As it starts approaching where your longer term target is, where you think that trend is going to end, you don't want to continue buying full share size because the odds of getting it to pull back and chop around increase at that point in time. And you can do this with intraday charts as well, right? You can see here you've got a gap up, price pulls back, gives you a PBS, a pristine buy setup. You buy it here, sell as it moves away, buy it again with the new setup, sell it as it moves away, buy, sell, and here it is setting up. I mean, if there were more time in this day, this would be setting up for what could be a late day breakout, right? But this ends the day just going sideways. Right? Like I said, this isn't really something you need to be too focused on in the beginning. In the beginning, you should really just be worried about nailing down your ability to recognize the setups as well as the amplifiers and making sure you're trading in the direction of the trend with the larger time frame in your favor. That should be your primary goal in the beginning, but this is something that you can, of course, work up towards. All right, so where to go from here? Obviously, you've taken in a tremendous amount of information over the last 2 days, probably more than you may have expected. So I'm sure to a certain degree, you're a bit feeling hungover in a sense with all of this information to now digest and absorb. But you've got access to the manual. You will have access to this recording, and you will have access to the black room, the trading room with Sammy, myself, Ifan, Mark, and Ryan. And then you'll also have access to the coaching. So there will be plenty of follow-up over the coming days, weeks, and months. But it's going to take a little time to organize this information into a way that makes sense for you. So, take your time with it. Don't get frustrated. It's still a learning experience. What I suggest is that come tomorrow, you do not trade. In fact, I would suggest you not trade for the next couple days. Maybe you just want to look at things, paper trade, see how it's all developing, right? See how it's all coming together. But I wouldn't necessarily suggest you go and start trading tomorrow because you're going to see things differently. It's a new way of looking at the market. So, as I said, I wouldn't suggest you trade over the next couple days. You want to review and reread the manual, of course. And as you go back and look at charts, be mindful of identifying the stages, stage 4, stage 2, transitions, the various setups, things of that nature. Is the presentation available in Adobe format to download? I don't believe so, but if you reach out to your counselor, I'm sure they'll see what they can do for you, but I don't believe so. Have you back tested those setups? Do you have any statistics? Do not, no. I just know that we can go back to the beginning of time and find these setups repeating over and over again. And it doesn't matter what you look at. Could be, you know, when the rice traders were trading to all the way up until now, you know, Bitcoin. You can look at Bitcoin charts. You can see this happening. You can look at futures, Forex. It really, as I said, makes no difference. It works regardless of what it is you're trading, because all of these things are based on human emotion. It's also going to be a good idea for you to start a document called What I Want to Trade, and start listing the things that you like or do not like, in which case you would call that document What I Do Not Want to Trade. And you can have different folders. What do you want to see pullbacks or breakouts looking like? What time frames do you like to trade from? How long do you like to hold those trades for? What are your favorite setups? And having a folder of trades that, you know, didn't work out or that you just didn't like is not a bad idea either, because then you can start to compile a library, in a sense, of low quality setups. Setups that you feel were not high enough quality to trade from. And that'll help to reinforce this idea of focusing on quality. So remember that what you want to do is find a picture of power. And there are 4 things you should be looking for: a strong trend on a larger time frame, a wide range bar igniting a move, ideally relative strength or weakness, either to the market or to the sector the stock is in, and gapping, right? If it's gapping and showing strength, confirming the higher time frame, those are some of the things you want to look for. Once you've got that, you find the time frame of focus to play from, which will be determined by, of course, you and what you're most comfortable with, and then you find the appropriate strategy to enter based upon, whether it's a PBS, PSS, breakout, breakdown, you know, what have you. And then, of course, you find an entry, get on board, and manage it through. What do I think of pivot lines? You know, pivot lines, I think they're good if you're trading futures. I think they're more a little bit more valuable, because I know a lot of futures traders will trade in and around those pivot lines. But in my experience, it's like anything else. It becomes subjective. The first time it tests it, you will see a reaction. The second time, you'll still see a bit of a reaction. But eventually, the longer it spends there, the less important it is, right? And ultimately, the other thing that I will say on pivot lines is that unless it lines up with actual support or resistance, then even pivot lines aren't as valuable, as reliable as price support and resistance. So, do I think that they can provide some level of value? Yes, but you have to understand what their limitations are as well. So in other words, don't be misguided by them if you choose to use them. What's your idea about putting the stop in the system or keeping them in mind? I say you put it in the system all the time. You know, you always want to put it in the system, because if you don't, you could always justify, oh, you know, I'm not going to put it in, or, you know, maybe you justify why you're going to hold on to it a little bit longer. Right? Why should I hold on to it a little bit longer and see what happens? And that can get you in a lot of trouble. Um, do you look forward to see sectors or themes that might become active, like tax selling starting the new year? I mean, you definitely want to scan different sectors. You can do that at the end of each week and at the end of each month. Scan the different sectors to see, are transitions happening? You know, are there things happening where one sector is looking like it's going to weaken and another is going to start to take leadership, right? For example, I mean, if you look at the financials, XLF, that one has been strong and has taken on more of a leadership role of late, whereas tech has been weaker. And that's just evident through the S&P compared to the Qs as well. You can also look at the transportation index, which had been, somewhat shaky. It had pulled back during November, stabilized the middle part, and then really started pushing up higher with some really nice momentum. So there's definitely been rotation, and it's something, as I said, you look at the end of each week, at the end of each month, to gain insights from, to say, okay, this is where maybe I'm going to look to start focusing attention. If you look at airlines, they've been doing really well recently within the transportation space. Certain airlines obviously better than others, and that's why once you say, okay, here's this sector in general is doing well, then you start to look at names within that sector for strength or weakness. FedEx, UPS, those have been doing really well. Also, CSX, the rail name, that of etc. How important of etc. How important is level 2? I mean, look, I don't read too much into level 2 myself personally. It does provide some value just to see order flow and things of that nature, but I don't put too much attention to it as far as making trading decisions, because I've seen times where you'll have a big seller sitting up here at a certain level, and then as price starts to move up there, they just vanish. They're gone. So, like I said, I don't let it impact my decisions too much. As far as thoughts on initial or minimum bankroll money management techniques, max percent risk, that's different for everybody. I guess if I had to say a minimum, if you're going to be trading equities, a minimum, if you're trading out of a retail account, your own account, a minimum probably of, I'd say, $40,000 to $50,000 would be the minimum place to start. If you don't have that kind of money on hand, or if you simply don't want to tie that money up and put it to work somewhere else, you could consider a prop account, or you could consider trading either Forex or futures, even options. Options are far less costly than opening, a retail account. And myself and Dan Darrow, we also have an options newsletter service that you could get a trial to if that's something you're interested in. So there are different levels based on how much you actually want to put to work. If you open a futures account, it's not nearly as much. You can get started with that as little as $10,000. So you have choices. As far as money management techniques, that's different for everybody based on your personality. The one thing I will say on money management, though, is make sure that however you choose to manage positions, you're doing it objectively, as opposed to just saying, oh, I'm happy that I'm up $500, so I'm going to take the money and run. Or this just looks like it's ready to pull back, or I heard somebody else say some negative comments about this. Those are all subjective things, right? If you're going to manage a position, it should be based on the chart. And then the maximum percentage risk per trade, I wouldn't suggest you base it on a percentage amount. I'd say, okay, based on whatever account size you have, you don't want to risk any more than 1% of that per day. Okay, so that gives you a baseline. Then, based on that, you determine how much you're willing to risk per trade. So, if you say that you're willing to risk $1,000 a day, you could break that into 2 trades at $500 max risk per trade, or you can break it into 4 trades at $250. Right? Whatever you feel is most comfortable for you. What are common mistakes you see beginners of the approach make? I think one of the biggest mistakes is trading against the trend, either on the time frame that you're trading from or on the larger time frame. That really truly does account for most of the trading losses that we incur, is trading against the trend of the time frame we're taking the trade from or the larger time frame. Right? So that would be probably the number one thing I would suggest you try and be extra aware of. You don't even have to nail the entry correctly. If you're trading in the direction of the trend, you could be wrong in the entry or a little bit off in the entry, but if you've got the trend on your side and you've entered near support, you could manage that to a profit. Yeah, so once you have the setup, once you've got the PBS, for example, because you're buying it above a prior bar's high, you're gonna enter a buy stop. That's exactly right. You're gonna enter a buy stop or a sell stop if you're shorting to enter into the trade. Right, as opposed to a limit order as it falls into an area. Right, so you're going to enter a buy stop or a sell stop. What advice would you give to a trader to trade less because the commission fees build up? To me, I mean, yes, as Miles says, sitting on your hands and waiting for more information is certainly a valid strategy. But what I would also say is if you're taking too many trades, it's probably because you're looking at a very small time frame. Right? If you're looking at a 1 or a 2 minute and it's causing you to overtrade, the simplest thing to do would be get rid of it. Get it off your screens. Stop looking at it. So that would be some advice I would give to someone who feels like they're overtrading, is remove whatever it is that's causing you to overtrade. And oftentimes it will be looking at too small of a time frame. So on this slide, we have an example of a stock that's breaking out, right? You've got a daily breakout strong stock above the 20 MA. The market is strong. This is a 5-minute of the Qs. So you see the market strong. The stock here, you find an entry. Wide range bar off the first 5-minute bar, followed by an inside bar, 1, 2, 3 continuation, right? You're going to buy it over the highs, stop under the low, manage it on up. Right? And then even later on in the day, it's setting up for a late day breakout, but it does run out of time on that particular day. But in any case, right, this was all timed perfectly. You've got your picture of power. The market is strong. Intraday chart sets up a 1, 2, 3 continuation. There it is, right? That's what you're looking for. If you're looking at trading on the 5 and 15 and the entrance looks good on the 5, but if I look at the 2-minute, the entry point does not look good, how do you proceed? You take the trade off the 5, right? The 2-minute is a time frame that you try to refine your entry down to. But sometimes pictures just don't set up in ways that we like. If the 2-minute doesn't look good, but the 5-minute and 15-minute are still valid, then you go with that message. You take the 5-minute setup because you remember the larger time frames are the ones that should win out. So those larger time frames should continue moving in the direction of the overall trend, which I would assume in this case, I'll just say is up. So even if the 2-minute doesn't look the best, the 5-minute still, which is your primary time frame and gave you the original signal, you still take it from the 5-minute. Here's another example. Now we're going in the opposite direction. So the stock is gapping down. You can see it had been going sideways, but now we're gapping down below this area of major support, igniting a move down. The market also gapping down. So look, I'm not looking for a pattern in the market necessarily. I just want to confirm that it too is weak. I'm just looking for confirmation of weakness. So then this stock, it opens weak, starts to trade lower. So if you traded this breakdown, you would have gotten into it. Your stop would have been over the high of the day. It then retraces, making you sweat a little bit, but never stopping you out. It gives you a sell setup that it then rolls over from. Or you play this breakdown, this tight little consolidation, this pause that refreshes. And then you get your breakdown and it continues to move lower. And then again, later on in the day, you get that late day breakdown. All right, so you guys see all that? All that makes sense? I'm sure you're probably looking at these charts at this point with your eyes just glazed over, which is understandable. Okay. So over the next few days, like I said, I mean, start paper trading, get used to the platform if it's a new platform or you're just getting started out. Just watch things, see how they behave, see how they act, learn these strategies in real time. And then as you get more comfortable, switch to small risk, $5, $10, $25. And commissions may just be an expensive learning for the initial period of time. But if you can get that down, if you can get the setups down, it's then just a matter of scaling it. Yeah, of course. Happy to be patient with you guys. And yes, we can look at a couple examples too. So you've got some follow-up sessions. Make sure you're taking advantage of both the trading room as well as the coaching. There are, of course, future classes that you could consider. You will have a retake of this course. There's other opportunities that you have, other services that you'll have available to you if you feel like you want to specialize in any one thing. And of course, I do appreciate you guys being here, giving me the opportunity to impart this wisdom upon you. And, like I said, just taking the time out of your day, out of your weekend to be here with me. So it is very much appreciated. And with that, we will switch back over to some live charts here. Well, thanks, guys. I really appreciate that. And, if anybody wants to shoot me an email letting me know about their experience, I would love to hear your feedback. So if you just want to shoot me an email, again, like I said, I'd really appreciate Any and all feedback, Kurt at t3live.com. And like I said, I'd really appreciate that. Can we trade off of our IRA account to avoid the PDT problems? Yeah, you can. Obviously there's some restrictions with doing that, but you can. All right, so let's take a look. FTD. FTD as a short. Yeah, I mean, this is interesting. It's obviously been in a downtrend for a period of time. So let's take a look at that weekly. I mean, this thing's been getting absolutely hammered. So here, what I'm seeing is here you had a wide range bar down with volume, right? Now momentum is slowing. So I'm a little bit more cautious on this now. And especially, right, if we look right over here, let me see if I draw like a little line to it. You see that little breakdown that failed? That to me is also concerning because it tried to break down continuing this trend and it failed. So to be honest, I would give this time. I would not be looking to short this. In fact, I think if anything, it may try and move lower early part of this week and then snap back to the upside just based on some of these failures to move lower here recently. So I'd give that one some time. The MHLD, take a look at this one. And so with the MHLD, this one's a little more interesting, right? First of all, this sell setup failed because of that the new low reversal that we got. So that one failed initially. Now it's come back up to retest the high. Yeah, I mean, if this one breaks under the lows here, it is interesting. Let's just take a look at the weekly first. And yeah, I mean, the weekly definitely looks like it can continue lower. Got a decent little retracement here into the prior breakdown area, so that's interesting. As we go back to the daily, you can see the supply is building. So yes, this is something you could look to short under these lows here. What's that low? 70. So under 670, this becomes quite interesting. Race, Ferrari. This one, I mean, obviously, as you can see, has a tendency to gap quite a bit, but I do like it overall. It is weak. You have this wide range bar down. Notice, right, let's just kind of go backwards in time here for a minute. This move lower broke us from the uptrend. This put us into a transition from stage 2, stage 3, now going into a 4. Right? So once you got this breakdown here, this was your first retracement and lower high where you could have shorted. Okay, right in there. Price then has moved lower since, consolidating here. So yeah, I do like race as a short. We'll have to see where it's going to be opening come tomorrow. But this area right here, the 104 area, is kind of that line in the sand that ultimately needs to break in order to really open the door for additional downside. But I do like it because you can see off to the left, there's really nothing in terms of support. So there is plenty of room for it to fall. And even if you look at this at the highs, it's kind of like a head and shoulders top. So there's a lot of reasons to be looking for this to pull back in. And yes, it is a young stock, as you say. The CMG, this one's been interesting. Seems like it just can't get out of its own way when it comes to CMG and the news, but it seems to have found a bottom. You had a strong move up on the weekly here recently. It's pushed deeply into this resistance, and so as I look here at this daily chart, you can see it's above the moving averages. You had a pullback and buy setup that triggered as of Friday. So I would be looking for this to continue moving higher as we move into this coming week. I think this one's been beat up enough. It can now get a little bit of a reprieve and rally just a bit. As far as trading stocks under $10, as long as the volume is there, I don't see any issue with trading stocks under 10 bucks. That's the one thing I would always be mindful of is the volume. What does the volume look like, especially as an intraday trader? Because without volume, charts aren't going to move. Price isn't going to go anywhere. So you need the volume in order to get the volatility, whether it's a $10 stock or a $50 to $100 stock or more. Right? It's got to have the volume to give you the movement you're looking for. And like I said, that's more important for intraday trading. Okay. So is there anything else you guys would like to take a look at? The significance of the 50-period moving average, really it's just a self-fulfilling prophecy. It's something that a lot of traders will pay attention to. Nothing really special about it. When we talked about moving averages yesterday, we said the 40 and the 50 are kind of interchangeable. So nothing really special about it. It just kind of gives you a more intermediate term idea as to what the trend of some of the larger time frames are looking like. ASNA short. I see what you're looking at. I don't love it though, because this is one of those things that is so volatile. This is the kind of thing I was talking about where you can see that the supply is increasing. You can see that it might try to move lower, but it's close to support. And the way in which this trades, it's just very volatile. So I would say stay away from it. I mean, there's definitely better things out there. I wouldn't suggest you spend your time trying to find a good entry into something like this. FCX is a swing long. Whoops, FCX. I would wait on this one too, only because it's moving up into the upper end of this range, right? So it's coming up into this resistance area, and it's been going sideways. So it is interesting, right? If we go to the weekly chart, I like how it's setting up. It tried to move lower here a couple weeks ago, failed. Last week closed right up near the highs. So I definitely like how FCX is looking. And if we scale this back a bit, you can see that there is room for this to move higher. So I do like it, but I would give it a little bit more time before entering. Even if that means it breaks out initially, let that go and then look to play that initial or first pullback as we talked about. Yeah, I mean, it's definitely broken the uptrend. This move lower has broken the uptrend. And after yesterday or Friday, you got this bearish close. So it does look like it's getting ready to move lower. Taking a look at the hourly, you can see here this sell setup. So if it breaks under these lows here, under 25, I think it's got a good shot at moving back to the lows. And then looking at the weekly, it definitely got hit hard on the weekly, big volume. So it looks like this may need to pull back lower towards maybe $23, $22 before it's sitting on a little bit of support. So KRO is definitely interesting. Well, it's not something that I would be trading based on intraday charts because I can already see the volume just isn't really there to do that. So with that being said, I do like the pattern overall. right? It pulled back in after a gap and crap. Right here's a gap and crap at the high, pulls back, nice reversal here. It then has been stabilizing, closed strong on Friday, so I do like it. Right? The weekly chart, it's definitely up quite a number of weeks in a row, but I don't see any wide range bars that suggest it's necessarily done moving higher. So it is looking pretty good here. And obviously, the medical marijuana space in general is one that could certainly continue to benefit from discussions that are being had. I think this is one of those areas that really hasn't caught on as much as it should have, in a sense. I think also Bitcoin has put this on the back burner. So I think that the medical marijuana space in general is going to be a pretty lucrative, I mean, as it already has been, but I think it's going to continue to trend in that direction. BWA. Yeah, not a bad one. I would have rathered the bars up here at the high be a little smaller, but not a bad buy setup here. Pulling back, you get your changing of the guard. Bottoming tail yesterday, or rather Friday, it's into support. What's that weekly looking like? Yeah, the weekly, you've got your stage 2 uptrend. So, all in all, looks pretty good. Yeah, I mean, and because of how it pulled back from those highs, I would expect there to be a bit more of a stall at the highs up here. But all in all, as I said, I do like it as a buy setup. All right. Anything else you guys wanted to look at? Any other symbols you want to take a look at here before we wrap things up for today? KBLT. Is this the chart? KBLT? Okay. So with the gap down into support, it definitely has room to continue rallying to the upside. So the fact that it's down into this support, I think, does offer an opportunity to look at getting long if it can take out Friday's high. Although I am somewhat cautious about its ability to come all the way back up into the gap fill. Yeah, no, there was huge volume there too. So there's definitely a tremendous amount of accumulation, no doubt. So between that, the fact that it closed with a bottoming tail and held this support instead of continuing lower does suggest that somebody's stepping up here. So it does look like it can begin to move higher for sure. And that weekly, I mean, the weekly could be better. Obviously, after the breakout, it came right back in. But it is worth definitely keeping an eye on. And the AOBC. We got to see where this one goes. The gap down was definitely bearish as it broke below this support, but buyer stepped up. It closed above the open and right back into resistance. So what I'm looking at here is a rally up into resistance that could roll over, but at the same time, the fact that it was able to recover after a gap down like this. Not only did it gap down below this green bar, but it gapped down below this, what became support. It's kind of strong. So, like I said, I mean, I like the weekly trend. That's definitely indicating more weakness to come. But I would watch this closely over the coming days because there's definitely an opportunity that will come from it. I'm just not sure yet which direction. I need a little more information here. Because if a gap down like that is going to fail, it'll probably rip to the upside. But if it does start to roll over, then I think there's a nice opportunity lower. Yeah, CM's a nice little buy setup. I mean, I'm not crazy about it because it doesn't have support. So I would need to wait for this to create support, meaning can it can it push up a little bit maybe and then come back down, retest this low, and then begin to move up? So that's something I would look for on the CM, but I wouldn't be buying it right here if it were to break over these highs because, again, there's no support to the left. But it is not a bad pullback overall. Like I said, just for me personally, it needs a little bit more time. But if we look at the weekly, you can see it is a nice breakout, clearing these prior highs as well. And this pullback is roughly right around 50% or so. So Intel is interesting because when you look at it from a daily chart, it's not easy to necessarily see it as something that should be moving higher. However, it's interesting that you ask about it moving up, and without even looking at the weekly chart, I could tell you that this pullback is going to be some type of weekly buy setup, right? And so here it is. On the weekly chart, you can see there's your buy setup. And actually, even last week, you had it in place, but then we had the pressure of this most recent week bringing us even further down. So it is definitely interesting. It's in an interesting area. Really no support to the left, so it may need some more time to really develop, but it does have this unfilled gap below. I wouldn't be shocked if it needed to go down and fill this gap and then really start stabilizing. So I do think that longer term, INTC is up, but I believe that in the short term, it may need to pull back a little bit more before it can then really start stabilizing. All right. Anything else you guys want to take a look at? Or is everybody ready for a drink? Or two? All right, guys. Well, then don't let me be the reason to hold you up from a drink or two. I appreciate your time. It's been a pleasure. I enjoyed the company, enjoyed the questions. It's been great. What website are you using now to scan these names? It's freestockcharts.com. I'll type it in. Freestockcharts.com. And it works on Internet Explorer. Okay? All right, guys. So, again, like I said, I appreciate your time. If you have some time, you want to shoot me an email, just, kind of recapping, summarizing your experience, I would appreciate it. It's kurt@t3live.com. Otherwise, have an awesome evening. Enjoy the rest of your weekend. I appreciate you being here with me. And, of course, we'll talk again soon, whether it be in the black room or in coaching. Have a great night, everybody.